It's about that time of day again. My name is Joseph. Wednesday evening, January the 3rd. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bullish with a big old spike in channel ahead of tomorrow's weekly inventory report. And I've got my eyes on a key reversal line at 61.50 tomorrow for buying opportunities. The S&P is bullish with another spike in channel today, and recent signs of profit taking up at those highs are finally starting to tell us to look for that next round of buying opportunities. I'm watching that 27.05 area on the Emini S&P tomorrow. Over on the Nasdaq is bullish, and dare I say, finally starting to show some signs of balance this evening. And my plan for tomorrow is to look to fade range breakouts down around 65.60 tomorrow morning. Speaking of tomorrow, gold is bearish with a big, wide, multi-tiered channel on the chart. This tells me that I need to focus on selling as high as possible tomorrow because both sides of the market are in play. I'm going to talk about more about that in a second. Euro is bearish with a spike in channel as well, and my plan for that spike in channel is to look for selling opportunities up around that 28.50 for a triple measured move target tomorrow morning. We get a bunch of spike in channels. We got a great example of some shallow pullbacks and a real flat channel on gold tonight. I got a great newsletter in store for you guys and gals this evening. Plenty of awesome, reliable trading opportunities setting up for Thursday's session. Before I jump in, though, I want to remind you guys to make sure you subscribe to this YouTube channel if you haven't done so already, and make sure you click the bell icon on YouTube to make sure you get notified every time I post a new video. And if you really want to stay in tune with everything we do here at schooloftrade.com, dig into the description of that YouTube video, follow the link over here to the blog at Sideways Markets, and make sure on our blog at Sideways Markets you join our mailing list. I'll shoot you an email every evening we publish our nightly newsletter, or every Monday, Wednesday, Friday we send out our psychology lessons. Just below that, don't forget to follow me on social media. I'm always posting exclusive content on my StockTwits, Twitter, Facebook, and LinkedIn feeds. I've always got great charts up there every week on my social media. Speaking of charts, how easy is this? You can download all the charts for tomorrow's session right where that link says. Click here to download today's charts, grab that link, and get those charts ready for tomorrow. Speaking of tomorrow, what are you waiting for? Grab that free pass. Come out and join me as a guest in the trade room. You're going to learn more with me on that free pass than you will anywhere else on the interwebs. I can guarantee you that. And if you have any questions, don't be shy. Hit me up on live support. I've got live support buttons on the right-hand side of our blog and on our website homepage at schooloftrade.com. Boy, we got a lot to cover here. Today was a Wednesday that felt like a Tuesday because, of course, Monday was a holiday. We got a lot to cover here tonight. Starting first, though, with Thursday, January the 4th, right? Tomorrow being a Thursday. There's a lot of news tomorrow on the calendar, but not much is really actionable information. If you remember, as we talked about in last night's newsletter, all eyes right now are pretty much shifting to Friday's non-farm payroll number, which is scheduled at 8:30 a.m. Eastern Time. Like I said, tomorrow I'll get a lot of news, right? 2 o'clock, 3:50, 55, 4 o'clock, 4:30, but I don't expect this to have a big impact on the overnight session. We do have some big news coming out between, 3:50 and 4:30 tomorrow. So if you are trading in London, keep your eyes open for that news. Again, I don't expect to have too much going on because of that news, but there is some news tomorrow morning, right, because of that. Tomorrow into the U.S. session, we get the employment report, right, the ADP employment report at 8:15. That's not going to be a big deal for tomorrow. Don't worry too much about that report. The jobless claims number tomorrow at 8:30. Don't worry too much about that. Really, the only big news we have, we talked about this last night on the newsletter, is that weekly inventory report at 11 a.m. Eastern Time. Now, this is a pretty easy one because, we're used to having the inventory report for crude oil every Wednesday at 10:30. So Thursday at 11 o'clock, that's a breeze, right? This is right at the end of the morning session. We should be in store for pretty much a full session tomorrow over on crude oil futures. That's the only thing that really applies to, right? No need to worry about that report for anything else besides oil. maybe a little bit of nat gas, right? But again, we should be in store here for a relatively full session tomorrow. Only thing I always recommend, though, is definitely make sure you watch out 15 minutes before that news comes out. Again, usually it's at 10:30 on Wednesdays, right? Tomorrow, of course, 11 o'clock on Thursday because Monday was a holiday. So around 10:45 or so, we'll be watching that personality slow down. We'll sit on hands. Again, specifically for crude oil, that is, right? And then afterwards, usually when this number comes out on a Thursday because Monday was a holiday, it usually just kind of transitions right into lunch, and it usually isn't a very eventful, right, market after that news comes out. But as I always remind you, we never know what we're going to get. Whatever lemons we get tomorrow after that news, if it keeps moving into lunchtime, right, we'll gladly trade into it, right? But don't be surprised if traders take off for lunch, right, and come back to trade the afternoon session afterwards. Other than that, though, there's not a lot to worry about. We got, again, a lot of news overnight, not a lot of big market-moving events here overnight. These markets have been on a tear this week. Everything, pretty much everything, running higher. Emini's running higher, Crude running higher. Gold starting to make its turn down. Of course, Euro's going to turn, but a lot of these markets we assume tomorrow are probably going to be taking a bit of a pause, right, from that early 2018 rush we've seen over the past few days. Speaking of the charts here, let's jump right in here. Now you guys are scheduled here for tomorrow. Let's jump in. We'll go crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the euro. Crude is bullish, trading at the high of a spike and channel pattern ahead of tomorrow's weekly inventory report. Now, my goal with any channel is to trade with rotation, buying off the lows and taking profit at the highs. And I would love to find some seller failures and trap opportunities down at that reversal line at 61.5 tomorrow morning. As you can see here, and again, as I mentioned, we have that big inventory report tomorrow at 11 a.m. Eastern time. So 10:45, you really want to start watching, right, that market personality, right? So make sure you guys have a finger on the pulse tomorrow morning as it slows down. Most important thing right now, we are 3 legs up here. Now, I talked about this before we went away on break. Right, 3 legs up, usually you're going to see some significant profit taking. If we keep going higher, though, look for a 4th leg higher. And in my experience, 4 legs higher is just about as far as a market will go before we start seeing some significant pullbacks, right? So be aware of that tomorrow. We may not be done this move higher. As you can see, this market has been, right, very, very perky here today. So I'm going to keep an eye out for a 4th leg higher here. We won't know what that looks like until we get the pullback here. But if we come out tomorrow morning and we see that 4th leg higher here, make sure you mark that up, right? And you'll probably end up seeing the market stall out there before we get that pullback. We'll talk about more of that here as we go. That's the first thing, right? You see we're 3 legs up here right now. Second big component here is strong move up. We get a clear spike, and it looks like a spike in channel. This spike in channel I'm drawing off of the lows, right? We got 1, 2, 3, 4, 5 tests at that low. So we know they're using that trend line. And then, of course, I'm popping it up at the highs here, adding that midline on. It looks like that's the best fit. Obviously we're bullish. Clearly the market, right, red hot here today, ahead of tomorrow's inventory report. So we're definitely bullish. We have a spike in channel. Anytime I have a spike in channel, and we're going to talk about a lot of these tonight on this newsletter, anytime I have a spike in channel, I'm always looking for the base of that channel, right? It's going to draw this up here for you. We're going to see a few more of these tonight, so don't worry here. But the base of that channel and the first pullback, that's usually where we're going to get that pullback, right, and then go back in. So that's typically where I'm looking for buying opportunities on a bull spike in channel. The one thing you'll notice about this particular spike in channel is the size of the spike compared to the size of the channel, right? Notice how the spike is very small and the channel is very large, right? So if you've watched my previous newsletters before, you're probably thinking, well, Joe, aren't we looking for that buy way down here? By the time we get down to 60 and 3/4, 60.75, this will be a bear market. So I'm not going to be waiting for that deep of a pullback. I'm going to shift my analysis a little bit higher here. I've got my eyes on this beautiful reversal line. You'll notice it was tested once there, but a very small, shallow pullback. Normally, these reversal lines are much more effective. We can go up, pull back down, right, and grab it from there. So spike and channel and 3 legs up, those are pretty much the most important variables on the chart right now. Now let's break it down. What if price goes up? What if price goes down? What if price goes lower? Anything can happen on an inventory day for crude, so let's get ready for it. Now, first of all, we'd love to see the market pull back. And the ideal scenario for a pullback, what I call a 2-legged pullback. As we pull back, we draw that trend line coming down overhead, up and over, right, to use it on the opposite side. That oftentimes leads to a failure pattern followed by what I call a breakout pullback, right? Breakout, pull back, and go. So there's a number of different ways in which we can participate in this, right? 2-legged pullback to a trend line, failure pattern for the bears, and of course that pullback, right, after that strength going higher. In that situation, where's the objective? The objective at this point now is to get back up and retest that high, right? So that's your goal. Your goal is to get back to retest that previous high, and then we'll look and see if we get acceptance to new highs, and we'll look for buying opportunities going forward from there. So for a pullback here, right, if we get a pullback going lower, I'm watching again the reversal line at 61.5. Prior swings, of course, are always pretty easy, right, to line up as a battle zone for me as well. What if price goes sideways? Like I mentioned earlier, we are at 3 legs higher here. If we don't see anybody taking profit, if we don't see sellers try to weasel their way into this market right now, we could find ourselves going sideways here tomorrow. Anytime I have double tops and double bottoms, or a little bit easier way to describe this, anytime a bull market, which is making higher highs, obviously, anytime those bull markets stops making new higher highs, I now want to start looking for a trading range. You're going to start seeing that. You'll see that in a few charts from now on the Nasdaq. Get a great example of that. So if we do see some double tops, double bottoms here forming at these highs, in other words, if we don't pull back, we'll call it a trading range. And anytime we have a trading range, I start looking for that 2-try rule. I'm basically looking for the sellers to try once, the sellers to try twice, and then I can look for buying opportunities going back up in, right? So think about it this way: 1 try, 2 tries, and then back up in. Once I start seeing that second attempt start to fail, then I'm looking for that buy, again, going back up to retest that high of day, and then we'll go from there and see if we get rejection or acceptance from there. A great tutorial I've done recently on our YouTube channel, right, was on the topic of acceptance and rejection. If you're on my blog, you can search for acceptance or rejection term, right, or on my YouTube channel, you'll find that in the category under trading strategies. Looking good. So that's if price goes sideways. What if price goes higher here? Well, if we keep grinding higher here, I'm going to be watching to see, first of all, if we respect the top of this channel, right? So if we continue going higher here, and we don't pull back, but we respect the top of that channel, nothing really changes, right? We're looking for that 2-legged pullback, right, to retest that high. The one thing I always caution all of my clients is if we're waiting for a pullback, but price hasn't pulled back yet, if it's still grinding higher, everything is still a little bit lower probability up here, I want to wait to buy low. I want to wait to buy at levels of support, right? So try to find that pullback, right, little trap low, 2-legged pullback, and buy from there. So we know if price goes up, if we know if price goes down, and we know what we're looking for if price goes, right, price goes sideways. Tomorrow morning, inventories at 11 o'clock Eastern time, so get at it here before 10:45. How do we turn bearish tomorrow? It's definitely possible, right? Easily could turn bearish tomorrow because we got inventories at 11 o'clock Eastern time. And I'll tell you right now, we oftentimes see a complete trend reversal just before the weekly inventory report comes out, almost as if to set things up for another round of buyers going higher in the afternoon session tomorrow. What would that look like? 3 things: strength, pull back to the moving average, and strength going lower, right? Strength, pullback, and strength. Once we start seeing these bears take off to the downside, again, on strength, right? This is where you've got to have that intimate relationship with the market that you're trading. This is where you've got to spend some significant time consistently watching these charts so you know what it looks like when a market is strong, right, compared to when a market is weak. If we see that strong move down, right, don't forget, strong move down isn't a guaranteed reversal because it could easily be a failure, and we'll look for that failure going right back up to retest that high. But if the bears can take it lower on strength, and I'm talking it will be obvious, right, when it drops off that high. First move lower, hold the pullback to the moving average, and if it really runs lower, that's going to be your sign this market now has changed directions. And in that situation, we'll draw off the high, find that new channel, mark up, right, mark up these prior swings, and I'll look for that two-legged trap high, right, to sell this sucker back down to that low. At this point, the objective will be back down where we came from today, down around 60.28. We'll look for a new set of measured moves, possibly 3 legs back down tomorrow, right? And we'll, of course, we'll know that, right? We'll know more about that once we get there. So again, tomorrow, inventory is delayed to 11 o'clock Eastern time. Get a plan, and I'll see you guys tomorrow, 8 o'clock Eastern time, and we'll trade the plan together. How about some S&P? The Emini is bullish with a spike in channel pattern, telling me to look for buying opportunities using a two-legged pullback into the battle zone for a retest of the high tomorrow. Another spike in channel, right? It's been the week of the spike in channel here, and this is not the last one you're going to see tonight. There's a lot more on that. Now, take a look at this spike in channel compared to that spike in channel on crude oil. Do you see how the spike is small and the channel is wide? Yeah, we're probably not going to get a full pullback into that correction zone. On the S&P, a little bit different story, right? Big move up, pulls back, new higher high, right? See the difference? This one has a much larger spike, right? Much smaller channel, right, compared to that crude market. In this case, now we can look left. There's the first pullback. There's the base of that channel. That creates my battle zone, and that's ultimately where we know we're going to get the most reliable, and not just the most reliable, but the most profitable trading opportunities, right? If we can get a nice deep pullback on this into that battle zone, we have all that space now up to the overhead target back at that high. And whenever we have a position, whenever we have a situation where traders can take a small amount of risk, right, for a big amount of reward, you know that's going to get people excited, and that, of course, increases the reliability of that trade. Let's give it a shot here. Price goes up, price goes down, price goes sideways. Obviously, price goes lower, right? We want to see this, and you can see this big red candle here right now. This will be interesting to see how this, right, how the rest of this evening develops here. We already have the potential here for a trend line coming lower, right? So you'll notice as we go lower, right, up and over, that would be an option, right, if we can pull back a little bit further. Also watching for a potential second leg lower into the moving average. Moving average, we'll try to hold for those bears. We'll look for that failure, break, and pull back. This, of course, is not drawn to scale. This could be a little bit lower down in that battle zone, right? Failure into pullback from there, right, to make sure we get low, right, buy as low as possible, coming off of support, right, with a nice big target, waiting back up to retest the high. What if price goes sideways? If you look at the Nasdaq tonight, the Nasdaq's a little bit ahead of the S&P, so we'll grab that next, right? But if we immediately now go, for example, if we go right back to retest the high and then pull back here, now I'm going to start looking at this as a trading range. And of course, anytime we have a trading range, I'm always thinking, right, let's go 2-try rule, 1 try, 2 try, and let's buy, right, let's buy off of that low. Seller failures in a bull market below the low of a trading range, right, that's the secret sauce for the best results, right? Don't try to fade each breakout. Look for the 2-try rule and fade that breakout, right? Wait for them to try again. So that's if price goes sideways. And again, right, it could be a little bit narrower here. We could find ourselves trading sideways there tomorrow, 1 try, 2 try. It really doesn't matter the location of the entry. I just want to get below the range, let those bears try once, let them pull back, try twice, right? And then once they fail that second attempt, then we know we have ourselves a buying opportunity. What if price goes higher here? Well, we haven't seen much of a pullback. This is the deepest pullback we've seen here in, well, pretty much all day today, right? This is about the deepest pullback we've already seen. If price goes higher here, right? If we go higher, then we will have retested that high after a pullback, retesting that high. If we keep going higher, that tells us buyers are now looking for a fourth leg higher, right? So if we grab this and project up, we've got our double up, triple up, and then our quadruple up is going to be up around that 27.18 area, right? Up around that 27.18 to 27.20 area. So we already know we have a target waiting for us. We'll call that the quadruple up, right? That'll be 4 legs higher. And as I mentioned earlier, whenever a mark goes 4 legs, right? There's 1 leg, 2 legs, 3 legs, right? 4 legs higher. Whenever we go 4 legs, we usually see that as being kind of the final run before we get a nice deep pullback. But if we do see the market running higher here, I'm going to keep using this trend line as best I can, right? Trying to be a buyer coming back here and ultimately using this resistance as support, right, as we continue, again, looking for buying opportunities, but buying at support here for tomorrow. Don't be surprised, though, if we do make a short-term run overnight. Don't be surprised if we come in tomorrow morning and we see the market trading sideways up around that quadruple up. If we do see it going sideways up there, right, 1 try, 2 try, and then back up we go. Again, focused on buying as low as possible, buying at support rather than buying at resistance. I don't care how red hot a market is, I always want to stay disciplined, right? Because you know what happens, right? The minute you buy the high is the minute this thing pulls back, right? It's the minute it pulls back, and that's the minute you learn that valuable lesson. How do we turn bearish here for tomorrow, right? We're looking for tomorrow to turn bearish. 3 things, right? We got the first strong move down. All we need now is a moving average pullback, right? And another strong move through. Again, look for that strength after they hold that pullback. That's going to give you the clue that buyers are no longer participating. The buyers are becoming sellers. They're taking their profit, and we're off the race to the downside. If that happens here, draw that channel down, find that low, right? Get that level of resistance marked up, all right, and look for that chance to sell high, right, after we come back up around. I never like to chase the market as it goes lower, right? Again, I want to sell as the market's going lower. I want to make it a habit to start selling as the market goes higher, right? 2-legged pullback, right, into that level of resistance. And again, we'll look for some additional levels as we develop tomorrow morning as well. No real major news tomorrow on the S&P. So again, tomorrow's going to be a pretty important day because the last 2 days have been nothing but pretty much straight up on this market, right? So tomorrow will be a pretty good test to see, do we collapse off these highs on profit taking, or do we hold these highs and start going range bound here for tomorrow with a bull bias? Tomorrow morning, 8 o'clock Eastern time, we'll be in our trade room, and we're going to see for ourselves shortly after the opening bell tomorrow morning. How about some Nasdaq? Nasdaq is bullish with a spike in channel pattern that's already pulled back and retested the high. Now, a couple clues on this. The shallow pullback, right, kind of the shallowness of this pullback, or the lack of a deep pullback, combined with, and this is the most important, combined with that lack of follow through to new highs, tells me this is most likely turning sideways into a range. So my plan is to use the 2-try rule to buy seller failures down in the battle zone tomorrow morning. Another spike in channel. Now this is a really good example here. We're really starting to see kind of different phases, right, of these spike in channels here. I think the most important clue though is that if you draw the spike in channel correctly, right, strong move up, pulls back up, that spike in channel, great fit if you draw it like that, right? If you draw it like this, I think you're a little bit too late on that spike in channel, right? You're not really explaining it all properly. But that spike in channel, what do we always talk about with a spike in channel, right? Looking for a pullback and a retest of the high, right? We're looking to go back to the base of that channel, right? So think about this for a moment. What is the condition of that pullback? It's a shallow pullback. What does a shallow pullback tell you? It tells you that any conservative traders are still waiting with their ammunition loaded, ready to get into this market. if you look closely here, we still have not tested this darn moving average, right? This is the same problem we had last night on the newsletter, right? And we're still dealing with again here on the Nasdaq here tonight, right? So back-to-back days here, shallow pullback. Shallow pullbacks tell me that unless we get a tremendous spike lower, you're going to see a ton of buyers waiting down here, probably down in that battle zone for a move back up to retest that high. The second big clue is after it did pull back, a very shallow pullback for that matter, what happens then? We go back to retest the high. Now, when we retest the high, you tell me, are we seeing buyers buy more, or do you think buyers took their profit? It looks to me like buyers didn't buy anymore. Maybe they haven't taken all their profit yet because we haven't pulled back very far yet, right? But we're definitely seeing, the term that I use is the term rejection. Right? We're no longer seeing buyers eager to keep buying new highs, right? Buyers keep buying new highs, buying new highs, buying new highs, right? Buying new highs. They've been doing this now, right? Since the ball dropped in 2017, right? So we know these buyers have had a healthy appetite for buying high. It appears now, at least in the short term, right? Those buyers have their appetite taken care of here for now. Whenever we have a strong move, new highs, and then we don't make new highs, we then start looking for a trading range. Take that pullback, right, mark up that low, and this becomes a trading range. Now, at this point, we can put together a plan quite easily. What if price goes up? What if price goes down, right? What if price goes sideways? Well, first of all, we assume that price is going sideways here because of the way it finished the day today, right? We'll talk about the price going higher here in a moment. Whenever we see this, now we look for, of course, 2-try rule, 1 try, 2 try. Let those bears try twice, and once we see them fail after that second attempt, then we're looking for that move right back up. Again, because of that shallow pullbacks or the shallow pullbacks we've seen over the past few days, we do expect there to be quite a bit of interest, right, if we do get a decent size pullback here. That's if price goes sideways. If price goes lower, it doesn't really change very much. I'm going to draw a trend line down off these highs. Going to see how that trend line's acting up now, get down below that range. I would love to use the battle zone around that 65, 61 area, but it's definitely not required. I just want to get down below that range because, again, that shallow pullback, I'm expecting there to be buyers waiting down here below this trading range. What if price goes higher here? What if we go higher here tomorrow? This trading range, or should I say, this rejection at the high, is a significant clue, and I have to take it seriously. I can no longer try to just blindly buy the breakouts going higher. So what I'll do is I'm going to look for what I call a fake out, breakout, pullback. Step 1, strong move up. How strong? Strong enough to get this moving average up above the high of this range at 89.25. Then what I'll do now is I'll try to use this level of resistance as an area of support. Very important. I always like to look for then a two-legged pullback down to that moving average so I can be a buyer using the top of that range, get the moving average up above it. What happens quite a bit though is we see stuff like this. We'll get a breakout, we'll pull back, buyers sort of buy that pullback, but now they're buying right into that level of resistance that was proven to be effective before, right? And what happens is it ends up flushing people out, right, and running back lower. Once it runs lower, you know what we're looking for, 1 try, 2 try, right, to be the buyer right there. So don't get caught trying to buy that breakout higher tomorrow on the Nasdaq. Wait for that breakout pullback, right? What I call the fake out breakout pullback. Get the moving average high enough, right? And then buy that two-legged pullback. Last but not least, how do we turn bearish here tomorrow on the NQ? It's like I mentioned last night, it's a little bit tough to imagine this market turning bearish without a ton of profit taking here, right? But nonetheless, though, 3 steps for reversal. Strong move down, right? Pull back, hold the pullback, right? Strong move down, that'll flush out, right, and give buyers a chance to buy low. If those sellers can hold that pullback and then give us a nice strong run lower, right, we'll see how they react around that prior month high. That may be kind of where things get hung up. We may end up seeing the bears take it lower, get stuck around this, then we may end up seeing jump back up, right, for the buy tomorrow morning. Again, just because we haven't seen a pullback yet, right? And so if we do get a pullback, a deep two-legged pullback, buyers are going to go, hallelujah, right? We finally got something we can buy here, right? And they'll try to go back up, right, to retest that high. Again, strength, pullback, strength. If we do get that real strong move lower coming off that test of the moving average, then we know we're looking for the continuation. I'm going to want to see it go below that prior month high, right? And then we can start looking for that, right? That channel, right? Sell high from there. Just give it, I would say be a little more patient tomorrow on the sell side, just because of the fact we've had 2 straight days without a single test of the moving average. People are literally waiting patiently right now, right, to buy the darn dip, right? And you can expect more of that tomorrow on the Nasdaq. How about some gold? This is an interesting chart here tonight on the yellow metal. Gold is bearish with a wide, almost flat channel. And that tells me that both sides of this market are participating, both buyers and sellers. So I need to be disciplined not to chase the market lower and focus on selling opportunities using traps and failures up above the moving average tomorrow. That's an easy way to look at it for tomorrow on gold. Your number one priority tomorrow on gold, and as long as we're still bearish, is to focus on selling above the moving average, because that will make sure you're using traps and buyer failures. Most important clue on this is the channel itself, right? You'll notice this channel is not a very steep channel. It's also really wide, right? Really wide. Now, to illustrate this, let's think about a real narrow, almost vertical channel. In this situation, the only people who can make money are sellers, right? Sell off the high, take your profit to the low. Could I make any money buying off this low, right? Could I buy the low of that channel? If I buy the low of that channel, where would my target be? Up at the high of the channel, right? But the problem is there's only a very small window there that I can get involved with. Very difficult to make money, right, when the channel is narrow, or should I say, very difficult to make money going against the trend when the channel is narrow and when the channel is steep, right? Because sellers are going to come right back in and they're going to pound this thing lower again. And so it's a very aggressive, very low probability way to earn a profit. When I look at a channel that's wider, right, and not as steep, it's easy to see I can sell off the highs, right? I can then buy off the lows, plenty of space to make some money going higher, right? I can sell off the highs, I can buy off the lows. Okay, so what does that mean? Well, it means that in the example earlier with that vertical channel, the only people here are sellers, right? In this example, there's buyers and sellers. So what you really want to do is focus when you have a really wide, narrow channel, really wide, almost flat channel. Both sides are trading. Be very careful selling low tomorrow. Be very careful not to chase after moves. And again, an easy rule of thumb tomorrow will be get above the moving average, right? As you saw today, the best selling opportunities today were above that moving average. So we've got a measured move in the chart. This measured move is a big, big clue. Anytime we see a measured move hit, we usually see a two-legged pullback and then a retest of that measured move. So I'm looking for, doesn't look likely right now because this big move down, big move up, and now big move down. But really, I'd like to find selling opportunities up inside this area, right? It was pretty much a prior trading range in there, kind of a triangle as the moving average flattened out, right? We get that battle zone up overhead. So I love to see this thing go back up, failure, strength, pullback and back down, failure pattern, strength into pullback, going back down. And again, just really trying to get in short here on gold, right, above that moving average, because when we're above that moving average, that will tell me, right, relatively speaking, I'm not going to fall victim to selling too low here for tomorrow. I would also say if you want to be a little bit more aggressive, you can look for 2 tries at the lows, 1 try, 2 try, right, and then look for buying opportunities coming off of that low. Personally, I have a hard time recommending counter trend trades to new traders, so I would recommend you follow that trend tomorrow, right? But this, of course, being an example of a market that you could start to dip your toe in the water for that tomorrow. If we really do run, it's been a little bit volatile here over the past few hours, we finished the session. If we really do run tomorrow, we get this big round number at 1,300. We get the 20,000 number on the euro, right? There's some big numbers. There's some big round numbers, big psychological levels waiting for targets tomorrow morning. Last but not least, what do we go up, go down, go sideways? Well, first of all, if we go up, one try, two try, look at that seller failure, sorry, buyer failure up above that channel for tomorrow. If we end up going sideways here, doesn't look like it right now, but if we go sideways here, same thing, right? Above the high of that channel, sell it lower. Right? If we go lower here, this is where it gets a little bit difficult, right? If it goes lower here, we got that measured move below that channel, right? As we standing there in our way right now. So if we do go lower, you know the plan, right? Get it up so we can sell it back down. That will take some patience tomorrow morning. Don't forget that big round number. If for some reason this bottom drops out of it and we tumble here tomorrow, right? If we do see the market just tumble here, we'll look and see if we can get this a little bit. There you go. Right, we'll see if we can use that trend line, moving average, right? Use the bottom of that channel, right? That'll kind of be your sell zone there tomorrow. But again, that will take a lot of strength, right? You're going to want to see a ton of strength going lower, get below that channel, and then hold the low of that channel as resistance for a big target down at that 1,300. Big round number. So big round number is definitely a magnet here for tomorrow, but we got to get to the measured move. We've got to get to the channel low here first. So don't go biting off too much right before we get there. How do we turn bullish? Well, we already have the big move up. Got a pretty strong move higher here. I would want to see, I think, to turn bullish, I want to see it go, pull, and go. One of the things that we talked about this just before the end of the new year or the end of the year 2017. One of the last videos I did on my YouTube channel was called the channel reversal strategy, right? That channel reversal strategy, if we can hold the top of that channel, right, that's a little bit aggressive to be buying the top of that channel, but then look for, right, the explosion higher, and of course, a target, of course, right, is back up to retest that high. Anytime we have a trend reversal, we know the next step is to look for that move back up to retest the extremes. And then from there, we haven't been this high in quite a while, right? This is very much uncharted territory for the past year or so on gold. So we'll have to go out and find our own bull channel, our own measured moves tomorrow, right? If we do end up going through that 1323. And again, we'll look at this market tomorrow morning in our trade room, opening up at 8 o'clock Eastern time. Wrapping up tonight over on the euro. Euro is bearish with a spike in channel pattern. Tell me to look for selling opportunities up above the channel highs, using those buyer failures for a target going back down to retest the low tomorrow. Here's another spike in channel and another potential triple measured move. One leg lower, two legs lower, three legs lower. Notice how I draw that triple measured move. It's drawn off the highest point of that pullback after we reach that measured move going lower, right? So that triple measured move is waiting for us down around that 2325, 2350 area for us tomorrow. Most important thing right now, though, is the spike in channel. That spike in channel looks beautiful. Nice rotation back and forth, right? At this point now, we've tested that channel once, twice, and three times. Probably not going to be that many bullets left in the gun up around that channel high anymore, right? You can imagine first test, second test, third test. Think of these levels of resistance almost like an electric fence, right? Every time it tests it, that electric fence loses some of its shock value, okay? So think about almost like an electric fence that loses a little bit of its juice every time, right, it gets tested. So as we look at this, three tests to the top of that channel, I would expect the next one now to give us a little bit more of a boost going higher. Going to look for that buyer failure coming off that moving average, pull back. This is where the buyers can take control. If they hold that pullback, if they can't take control though, that's when we start looking in, digging our heels in, grabbing that failure into a pullback, right, and then down to the low of that, right, of that channel here for tomorrow, right? So beautiful opportunity here if price goes higher. It almost also looks like a range here too, doesn't it, right? I almost put a range on here. It almost looks range bound. The moving average is almost going sideways here. So keep an eye out for that. This could also be a trading range tomorrow. Not much changes in that situation. Up, one try, two try, right? That's the big difference, right? In a trending market, I can look for buyer failures. In a range bound environment, I want to be patient for that 2-try rule. What if price goes lower? If price goes lower, we don't really have a lot of options down here. If price goes lower, I'm still waiting for that rotation back up so I can sell off those highs. We got some resistance trend lines coming down here, right? So these are all going to be, obviously, right, these are all going to be very important levels of resistance tomorrow, even if price goes lower here. Be very careful. I know on gold we talked about getting below that channel low, but just be aware that there's a measured move waiting down there, so you might want to sidestep that opportunity, right? Wait for it to hit the measured move, two-legged pullback, right, and then back down from there again. Remember, anytime we see a measured move, we usually get a bounce and a return back down to retest it again. So stick to your guns, stay patient tomorrow, right, and wait for that bounce. Speaking of tomorrow, don't forget, we'll be in our trade room 8 o'clock Eastern time with all of our advanced members. We have a great package for anyone who takes their trading career seriously. We have a beginner, intermediate, and advanced class here at School of Trade. I've been teaching and trading with our students every day in our trade room for almost 10 years now here at School of Trade, one of the longest running trade rooms on the planet. I got a great free trial if you want to see what it's all about. Join that free trial on the homepage of schooloftrade.com. There'll be a link in the description of that YouTube video. And don't forget, if you have any questions on the way, I'm always here to help. Hit me up on live support if you have any questions about anything we've talked about today. Membership, free trial, free pass, whatever your questions might be. Guys and gals, don't forget, post those comments below the YouTube video. Subscribe to our channel. Give me a thumbs up if you found value today. And always, always, always be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos.